Hello, everyone, and welcome to the European VC. We are here for the final podcast interview at Mark Penkeles' apartment doing super venture.
Yes.
And we're here with Philipp von Knesebeck from BFP, and of course, Mark and David, my dear co-founder and partner in crime. So thank you. Welcome to
Thank
the
you.
show.
Thanks for having me.
This was their finest hour.
Tear down this wall.
It's more than just an alliance. This is a union of values.
United and determined, we can serve as a model for other regions of the world.
The nature of a problem requires a European response.
Europe is a story of new beginnings, new beginnings.
Let's start acting.
This show is not investment advice, and the hosts of this episode may be invested in the funds and companies featured.
So I think we have to just, in recognition that we are in Berlin, to have a good time for a super venture, I think we should ask you, what did you do last night? What did you do yesterday? And what are you looking most forward to for this conference?
So we had our own little event yesterday, which was fun. Very small group, went on quite long. So I hear some of my colleagues have been doing 7 a.m. podcasts. I wouldn't have been in good shape for that. And it's great. I mean, this is a great conference. Everyone is in town, so back to back really. But great to catch up with everyone in person. So more of that.
Absolutely more of that. Philipp, tell me the story about how you got into venture.
That's an interesting one actually. So my mother basically was a publisher. Started a publishing house back in the 80s. Ran it for 20 years, and then when she found out that none of her kids had any interest in taking it over, she sold it back in the early 2000s. And that was sort of, very nice firm, which still exists, but very old-fashioned, right? Printed paper, coffee table books, nothing digital of any kind. So in sort of the mid-2000s, once I had finished my studies, I had actually worked in banking, but together with my siblings, we created a concept to digitize many of the processes. In publishing and pitched that, but obviously my mom would have said, yes, great, but unfortunately she wasn't in charge anymore. So to the management of the group that bought her publishing house, and the guy is brilliant. Built a fantastic sort of empire in the publishing world. French guy, super cool guy, but he didn't think the internet was a thing. So he said no, and that led us to basically start our own.
Basic mistake.
Yeah, basic mistake. God bless him. But it basically led to us, and by us it was actually my brother and my sister in that case, and I was moonlighting a little bit next to my banking job. Basically created a digital publishing company. It's a software as a service, automating much of the processes like production, distribution, royalty, payments, and that's a really a sort of good software solution, and it's been sold to hundreds of publishing houses. So we didn't actually raise capital at the time because we sort of bootstrapped it. But that sort of brought me into venture, and then.
And how does one from that think, fund of fund? I think I should do a fund of fund.
So I went way up from the startup to the fund of fund. That's something. So
you realized how wrong it could have gone, how many times. So you thought, okay, I'm not going to just do a venture fund, which will only give me 30 of those crazy companies. I'm going to do a fund of fund, and I'm going to get 300 of those.
Well, that actually was a sort of a logical conclusion in a way, because I sort of saw. I mean, as I said, I was a bit on the sidelines, but I saw how tough it is, and I have huge respect for any founder going through that journey. How tough it is to build a business from nothing. The chances, unfortunately, of any individual sort of company becoming a unicorn are pretty slim, as we all know. So I very early understood the need to diversify, and then obviously you can go to the fund level or the funds level where you have really broad diversification. But yet, it's an interesting asset class because you can obviously have sort of high multiples on individual investments. Yeah. So our approach with BFP is to basically, yes, we diversify across many different things, geographies, verticals, etc. But compared to other fund of funds, we run a very, very concentrated portfolio. So it gives us sufficient downside